First half 2024 is over and it sucks. Hi everyone, welcome to my channel. My name is Zach and I am a popular investor with eToro where I manage over $15 million for over 9,000 copies. So the first half of 2024 is over and results have been bad. In 2024, we actually got performance around 15% where the market did 16.5%. While that's largely on track and kind of matching, what happened in the last 6 weeks have been absolutely terrible. But for those of you who are new to copying me, I always do videos when times are bad because people tend to panic, and I understand the reasons why people do it. Concept in finance is called loss aversion theory, so most people are subject to that, and it's perfectly understandable. So good thing I don't have to do these videos too much, right? Maybe just one or two. Okay, it's happened quite a bit. Because the market has gone up around 6%, while we have gone the other way and lost around 5 to 6%. Altogether, that's like a minus 11% against the market, which is the most painful part about the last 6 weeks. So what had happened? Remember, none of this is financial advice. If you need any help, any of these concepts or managing a portfolio, please do seek financial advice from a professional. I know the reasons why I've gone down so much and not performed well, but you can watch this video here. The reasons largely remain the same, except they've gotten worse. As you can see here, Daniel's finally had an uptick today, but it's largely dropped beyond the last time we did this update, where it was a 9% drop, and now it's dropped even more. China has continued to just absolutely just get slaughtered, and our portfolio is just suffering because of it. Look at this drop that we had here. And this is just today. It's like in a 3-ish% drop, right? It's just today. And there isn't really any fundamental news around these companies, it's just sentiment going crazy. There is, however, one stock that I hold, one of my largest positions, that had some bad news come out. Look at this. This is 3323, which is China Building Materials, one of my favorite stocks, and it dropped from $3 to $2.50. So 15% drop. Now this is a bad time. What happened here is that they issued a profit warning, which is a requirement for all listed companies. It's basically say there's a huge change in the profits from the last year to this year. And you can see here, they're expecting a loss of 2 billion RMB. So how does this compare to last year? You can see here the loss is 2 billion RMB. Is compared to last year, for the same period, was a 1.4 billion profit. And you can see here the reasons that, expected decrease is attributed to decrease in sales of cement, commercial concrete, glass fiber, and being the major groups products of the group. So decrease in sales volume, decline in performance associated, and increase in cost, partially offset by cost of sales. Okay, so this is not good, right? Like last year they made 1.4 B and this year they lost 2 B. But why am I not terribly worried? Well, for two reasons. One, if you look at their annual report from last year, so if you look at the annual report from last year, actually you can see that the profit for the total profit for the year, which is right here, 10.4, sorry, versus the 1.4 that they made in the first half. So clearly more revenue is recognized in the second half of the year. So even though there's a $2 billion loss, doesn't mean they will likely finish in negative territory towards the end of the year. Hopefully not, and probably not. And as you can see from their news reports, the shareholders are still kind of confident of the performance of the company itself. That's why they voted for share issuance repurchase. And even though you can see, like last year they had a bad year where profits plunged and revenue slipped, they still did a dividend. So as you can see here, they still did a dividend of about 9.82% as of current prices. Of course, this was slightly lower when price was a bit higher. But nonetheless, even if you go to our eToro portfolio, like right here where you have 3323, you can see that I have a lot of positions and they have a decent amount of refunds in each of the positions. So this is 37, 28, 33, 69, and 81. So there's a whole bunch of dividends that were received by this position. So even though you look at minus 4,400, which is terrible, there's about 700 in dividends. So it doesn't make up for the huge amount of losses, but does help buffer that. So do I still like this stock? The answer is yes. I think shareholders are still confident. That's why they're voting for share buybacks. Dividends still ongoing. They have a lot of debt. Let's not be mistaken about that. But at the same time, I do believe that because it's Chinese nationally owned, it's unlikely to completely fail. And believe if any business were to survive like this cycle of really bad construction in China, it's going to be the government owned. So typically what happens in a business cycle is that, when times are good, there's going to be a lot of new businesses popping up around here. And this happened, like when China was booming and there's a lot of construction and stuff going on. But what happened was, of course, China Evergrande, it was overbuilding. And so it went into this like depression, which is kind of where we are now. And during these periods, what happens is that a lot of companies that were established that are doing the same businesses tend to fail. And this creates a certain cycle. And I'm of the belief that, these business cycles are healthy for the economy. But at the same time, I believe the biggest and strongest are going to survive these depressionary periods. And China Building Materials, being owned by Chinese government, again, has access to very cheap funding. And again, it's unlikely to fail. So I believe that it's going to really be one of the only few players left once this recovery goes back along the way. And that's why I continue to hold the stock, even though it's down like 50% in our portfolio. Now, of course, this is not to mean the rest of our portfolio hasn't done that well. A lot of it hasn't, especially the Chinese plays. The currency plays has also not been going well. I've got this CAD Japanese yen position that's not been doing well, and I've got this dollar Swiss franc, which also hasn't been doing as well as I hope, despite all the election drama that's happening in Europe. Of course, the other factor that really played into our portfolio is cryptocurrency, because I love crypto so much. But you can see here, since the last time we updated, it's like 8.5%, but it's dropped a lot more since then. You can see it's dropped up to 23% more, so 8 to 23, it's gonna get another 15% down drag on the performance of crypto. So again, we held different things that we hope were going to go up in crypto that had a little bit more sensitivity, so they dropped even more. ETH is our biggest holding right now because I think the ETH ETF is going to come out sometime soon, and I believe that's going to be good for our portfolio. But other things that didn't do so well, like Matic, and we held a position in Chills as well that didn't do well. So yeah, all in all the updates that I had for the previous video were much the same. It's just that they got worse. Overall, am I worried about portfolio? No, I'm not. I think that the fundamentals remain largely the same. What's happened is really just market movements, especially in China portfolio. I believe, yes, 2Q2024 had a big announcement, which was bad. But the fundamentals of the Chinese economy are still, to me, decent, and potential for upside is still very large, so I continue to hold the Chinese position. Crypto, on the other hand, it's always a momentum game, so I still think there's going to be some momentum in cryptocurrency, especially if Donald Trump gets elected, so I still hold on to that belief. US dollar, I believe, will be stronger as the economy isn't doing as well as we hoped, while interest rates are lower in the Swiss franc, so while we cannot expect markets to continuously go up to the right, it's very frustrating watching the S&P do so well while portfolio lags behind. This is not a new scenario to me. I have had times in my portfolio where we have had these divergences. If you're interested in any part of this portfolio or interested in following my journey on eToro as I invest money, you can always click in the link in the description to join eToro and try a virtual account for yourself and see how easy it is to use. Link is in the description below. But I've long held the belief that all we can do is take away the stuff that we can't control. So markets, how they behave, their attitude towards China, we can't really control that. All we can do is make great decisions. And how do we make great decisions? By buying companies that we know are doing decently well, they have good fundamentals, and we just wait. And hopefully it pays off. And when it drops, we buy more. So right now I'm looking at the portfolio and I'm thinking it's kind of okay. We're still decent. We have a little bit of cash left, like 10 to 12%, and we have these forex positions which we can close out anytime and move into stock positions. So overall, I'm not terribly worried. I do think we're in good shape. I do hope the next quarter will be a better update, but overall, if the market really turns and goes really bad, I don't think we'll be as affected. For me, protecting the downside is way more important than any upside potential that we can get.